I'm Steven with LedgerGurus, and in this video I'm going to explain e-commerce expenses versus cost of goods sold, or COGS. COGS are the cost of producing your product and getting it to your warehouse ready to fulfill. For a deeper dive on COGS, see my video COGS Explained for e-commerce sellers. Now you might remember from my video on COGS versus cost of sales that there are additional expenses that go into a sale. So that could be things like your packaging for fulfillment, the actual shipping costs, things like advertising, merchant service fees, and those are also expenses, but those are not cost of goods sold. I know it's confusing. Those go down into the expenses category because cost of goods is cost of goods. They're sell related, but they are an expense. But wait, there's more. Running an e-commerce business involves other expenses that aren't related to the sale. These are often known as overhead expenses that are necessary. So what goes into overhead? Well, a big one is payroll. You got to pay your people, right? And that costs money. That usually is the biggest piece of overhead for most businesses. For an e-commerce business, that could also be things like rent for your warehouse, for your office space, whatnot. And don't forget the software. There's a lot of software in e-commerce. And any other expense that is not related to sales. So that plus the cost of sales expenses are all of your expenses. Now let's talk about where these costs fall on your income statement or profit and loss. There's a particular order and it's important to understand. So on your profit and loss statement at the top, you have your sales or revenue. Below that, you have your cost of goods sold or COGS. Subtracting COGS from revenue and you get your gross profit. This is what you've made from your products before any other expenses. After gross profit, we list out all of the other expenses. That includes your non-product sales expenses and then your overhead expenses. Your expenses make up your operating expenditures. Subtracting your operating expenses from your gross profit gives you your operating income, which is a measure of profitability of your business operations. It's really important to understand the order of your income statement because it tells you a lot about your business. For example, a high gross profit business with low operating income could show you that your business overhead is too high. Understanding the key points in your income statement will help you optimize the right areas of your business. So if this was helpful, like it, ask me a question in the comments, share it, and subscribe to our channel where you'll get more e-commerce and finance insights like these.